Yes, sir. Yes, sir. I miss y'all, man.
Yo,
Yes, sir.
my nigga Primo.
Yeah.
What's good, Primo?
How you, bro?
Chilling.
My boy, bless you. Take it live, bro.
Feeling fucking amazing, I'd have been blazing, I'd have been saging. I'm feeling fucking amazing, I'd have been blazing, I'd have been saging. I'm feeling fucking amazing, I'm feeling fucking amazing, I'm feeling fucking amazing. Feeling colossal Geronimo. I'm feeling fucking amazing, I'd have been blazing, I'd have been saging. Growing from out of the pavement, I had to face it, I will advise it though. Really, I gotta remind them folk, I'm on my way out to mine the cold. I'm in the spot like a domino, feeling colossal Geronimo. Yes, I'm full-fledged and out the gate. Baby gold, it ain't for no debate. Separate and minimize the hate, elevated love the only way. 10 years and I'm still at it, niggas jumping the bandwagon. Blueprints fully formatted, bossed up and got more shredded. Listen. I'd have been blazing, I'd have been saging. I'm feeling fucking amazing, I'd have been blazing, I'd have been saging. I'm feeling fucking amazing, I'm feeling fucking amazing, I'm feeling fucking amazing. Feeling colossal Geronimo.
tired of sitting on the sidelines while others are making millions in the world of cryptocurrency? Well, wake up. It's time to stop gambling your life away at the crypto casino and make some massive, professional, skill-based gains. Welcome to the Cryptocurrency Investing Campus, where I, Professor Adam, transform you into an actual investing professional by equipping you with the most cutting-edge and advanced skills exclusive to the real world only. Trend probability modeling. Stay one step ahead of the game as we stack the odds high in our favor. Learn how to spot trends before they explode in both the up and down directions. Strategic Omega Modern Portfolio Theory. Modern Portfolio Theory is the bank's best kept secret for portfolio management. I brought it into our world and made it 100 times better. This is one of the greatest portfolio management techniques ever created. Last but not least, full cycle valuation. Learn the art of valuing the entire crypto market from start to finish. Develop an eye for understanding where we are and cash in on rare value opportunities. Hear from my successful students who've transformed their lives using these very skills. They're no different to you, but they've changed their lives with my methods. The market is becoming more competitive by the day. Act now and build world-class investing systems in the most practical university on earth. So if you're ready to take control of your wealth by embracing the modern, the cutting edge, the world class, then join the Crypto Investing Campus today. The future of your portfolio is in your hands. GM everybody, it's your man Professor Adam back at you again with another episode of Investing Analysis. Good to have you all here. Hopefully you've all been working very hard and you haven't allowed yourself to go into a retail trader mindset of degeneracy. If you're new here, welcome. Good to have you with us. It's likely that you are new here because most new people are induced into the market when prices are high, which is the exact wrong time to get involved, but that doesn't stop you anyway. So welcome. The fact that you're here means that you're going to probably save years and years of pain and suffering, and it's going to be replaced with the pain and suffering of me yelling at you constantly. If you are new here, it's unlikely you'll get the full value out of this time that you spend with me because everything that I discuss is under the assumption that you've already gone through your postgraduate research and you've built all of the systems that form the basis for how we approach the market. Without doing this, you will not really be entering the realm of professionalism and you'll be stuck within the realm of peasantry and poverty forever. And I'm not being facetious when I say that. You do need to have a very well-structured, sound rule set in order to get to a position like where I am. So without further ado, let's get into the analysis. What I'm going to do is I'm going to cover the TPIs, then I'll go through the market, discuss all the different data, and then of course we will get into the questions. So there has been no change in the MTPI. There has been no incremental change there despite the market declining not only slightly yesterday, but also this morning. Upon this morning's open, it seems to be down quite significantly. Just pretty much as I'm doing this stream right now. So it's interesting to see how the market is reacting. It looks like a reasonably normal correction to me. We've got others underperforming total, which is to be expected. Nothing unusual there. So I would expect to see major declines on these shitcoins, of which there are. That's fantastic to see. What have we got with the others here? Liquidity declining, Sol declining, Hex, of course, declining still. Yes, I am very, very disappointed in everybody that held this asset. Disgraceful behavior. Anyway, so we have a new lead of morning note from 42 Macro here. Yes, we did have a podcast that came out from Capital Wars. Michael Howell was on a podcast of sorts. I watched listened to the first few minutes of it, and I have a transcript here that I will try and find time to read through today. It's always time is my enemy, so we'll see if I can find time to get through it. However, the main takeaway that I understood from that, the other students have let me know, is that there is a 5-to-1 ratio when it comes to the increase in global liquidity versus the resulting price performance from Bitcoin, which is crazy. It's super cool to see. Of course, that relationship is likely to decay over time, but it's extremely good to see. I mean, it's something we already knew, that it had an outsized effect. I mean, Bitcoin is a very exponential asset, but having it explicitly stated is always an interesting way of looking at the market. So we do have a lead of morning note here, and nothing too crazy interesting in here. I'm going to look over this because this is probably relevant and interesting to us, and then I'll blast through the remainder of it. So investors are due for a central bank bonanza this week, with monetary authorities in Australia, Japan, US, China, Brazil, Indonesia, UK, Switzerland, Taiwan, Norway, and Mexico all providing policy updates. Where the Federal Open Market Commission revises its 2024-25 median policy rate forecast higher in the dot plot is a key decision of the week, which I believe they say later on is a likely outcome. Followed by the Bank of Japan's decision to end zero interest rate policy, or N, whatever that stands for. I should know that. With its first rate hike since 2007, Japan's largest labor union reported that its members received an average wage increase of 5.3% in its annual negotiations, largest in 30 years and well above the 4.1% median. There is a strong case to be made that the Fed should revise its dot plot in a hawkish manner. Fed funds futures currently see 3 cuts in 2024, so a downward revision to 2 cuts would represent a hawkish surprise. Remember, it is the change from one condition to another that markets often have the biggest issues with digesting, which would be very bearish for the market. Even if it was still supportive of interest rates, that they're still going to decrease interest rates, the fact that they're not decreasing them fast enough could be a bearish surprise that would shock the market lower, and that could potentially be one of those catalysts that gets us closer to liquidity-based fair value, despite PBOC continuing to stimulate. Elsewhere, we believe the Bank of Japan should rip off the Band-Aid tomorrow, given the CPI ex-fresh food. The Bank of Japan's preferred inflation gauge has been over their 2% target for 22 months. I mean, their stationary mean is now creeping up like crazy. Policy failure. Lastly, we have seen calls that the boost in manufacturing and investment growth will cause the PBOC to take its foot off the monetary easing gas, but we disagree. The PBOC's biggest challenge is its deflationary property sector, and the latest data indicate challenges persist. We expect the PBOC to continue front-loading monetary stimulus for at least another 2 to 3 months. So that is supportive of crypto, but it does not mean that it can't go downwards, because just because it's bullish in the not in the way that you think that it is. It's bullish in the way that it would bring this higher, to a higher level. It does not mean that this speculative gap does not exist, right? You can't just close your eyes and pretend that this doesn't exist. And a hawkish revision in interest rate dot plots from the Fed could potentially be that catalyst that sends that down to, that converges these two together. Excuse me. Right. DXY is overbought. DXY is overbought. You know what that means? It could potentially okay, so that's potentially bullish for crypto. So how do I digest that? How do I reconcile those two things? Probably something like that. More of a revision upwards into the zone of death. Again, remember, like I mentioned, the price behavior that's most likely to destroy most people is something that moves above and below these all-time highs, backwards and forwards, over and over and over again. That is going to confuse the most people. If the dollar index is overbought, which means that BTC would by definition be oversold, you would see maybe a reversion there, but it does not. That's just the zig and the zagging of it, right? It's still going to zig and zag downwards to consolidate or sterilize that gap between the two of them, especially because of this Fed air gap here. But we'll see. Obviously, there's so many different moving parts that a quantitative aggregation of them within the global liquidity index really is the best way of approaching this. And you can see that the kind of oversold condition in the VAMs kind of supports that dichotomy between DXY and BTC. Somebody asked me about smart money sentiment, and I was going to talk about this, but I don't think it's really relevant. But yeah, typically dumb money sentiment is way easier to find on the internet, and generally it works pretty well. So Now, moving across the weather model here, we've had a whole bunch of different updates. We've had the stock market and the bond market, I believe, go to a neutral state. Yeah, stock market and bond market go to neutral state. However, important to note that these liquidity metrics are still both bullish. These latest signal ones are the ones that we need to pay most careful attention to. If we see the macro net liquidity model, which is a domestic measure of liquidity from the United States, if we see that starting to decline, that is a major warning sign, and we'll be keeping a close eye on that. Of course, I don't anticipate global liquidity proxy to meaningfully decline. I believe that it's most likely to just stay kind of stable, especially with the counteracting forces of China stimulating and the Fed contracting at the same time. I would imagine the global liquidity proxy to stay mostly neutral through there, with the net liquidity proxy declining slightly over time, perhaps even going into a bearish trend. So that's going to be one of the most major signals for us moving forwards. Just a more detailed description of what we've already spoken about. Generally, the takeaway is that the PBOC should continue to front load for another couple of months, which is great, as it may temper the decline in stimulation coming from the Federal Reserve, which would be lovely to see, because that would prevent us from going down too far. Okay, so we'll go into the regular data now. So Capriol Risk Exchange Report, looking fine. Coinbase, its drawdowns are quite extreme, but there's no risk signal there. Kraken is looking a little bit suspicious. I off-ramped using Kraken the other day, and there was no issues. So I believe that it would just be something that if you were keeping your money on that exchange, you would be a little bit concerned about. Of course, as per usual, like I've said, we are facing an intercycle peak. We're not facing a full cycle peak. So any of these metrics which are likely to work for intercycle peaks, which is mainly just the profit and loss metric in my personal opinion, maybe this R-HODL ratio, but I've always been suspicious about its calibrations. MVRV is definitely a full cycle measurement, and so is the Blue Ball top cap. And I think the Puel multiple has been incorrectly adjusted. Oops. So those two ones are probably the ones that I believe in the most, and they're signaling major overbought conditions. HODL data. Cool. Okay. Anyway, moving on. Let's have a look at our flows. Oh dear, massive outflows from GBDC. The largest outflows of all time. Interesting. Largest GBDC outflows of all time. Interesting. So interesting, isn't it? Stuff that in your fucking change paradigm, fucking pipe and smoke it. Fucking spastics that have been talking to me about how the ETFs have fundamentally changed the way that the market moves. I hope we can all look back upon that phase in the crypto investing campus's history and laugh at it, because if I don't laugh, I just might start crying, because it's so retarded. Of course, those are full cycle indications, so I'm not going to spend time looking at those. I love my crypto quant dashboard. Of course, it's one of my favorite things to look at on a daily basis. A nice collection of long and short-term data in here. Business as usual, pretty much everywhere. Wish that would load. Okay, cool. SOPR still at such a super high level, obviously indicating that we should expect major levels of consolidation over the following months. Consolidation, high volatility consolidation, may potentially be good for the shitcoin market, like I mentioned in a previous investing analysis, where I was saying that an increase in volatility generally causes retail to come into the market, and then you also see an increase in shitcoinery activity when the market is declining, which can cause shitcoins to actually outperform on a very temporary basis. This is one of the reasons why I am late to the current I'm late to today's live stream is because I jumped into a pre-sale. And despite the market being at all-time highs, and I believe that it could potentially decline, I think that in the last gasp of this like local area before the Fed air gap and before, you know, any potential downwards trends, there is an opportunity here to have outperformance in shitcoins. This is not a green light to gamble, but it would be a green light to very intelligently approach your shitcoinery if that is something that you choose to do. Remember, I'm not advocating for day trading, but I do advocate for if you're going to shoot up heroin, at least use clean needles. So I'm effectively providing you with the clean needles in the fucking what was it, Beyond Mastery section. So I'll show you, because as some of you may be aware, some of you may or may not be aware, I have like a full leverage tokens guide, shitcoin analysis when you're confined to DEX tools. So yes, I do have shitcoin analysis, how to take an idea from concept to execution, how to use liquidity maps. I should rename that to liquidation maps. And of course, how liquidity works and other economic factors in there as well. You'll really do want to get to Beyond Mastery and get into the postgraduate chat channels beyond that. SDCA, TPI and RSPS, which is where the majority of your money is going to be made. And we have very, very detailed step-by-step guidelines on how to construct those systems. God help your soul if you can't find the strength to pass the masterclass and get into that, because it's very, very important. Right. So, no updates there. I'm going to fuck these off because, we have an update finally. Of course, it's still a couple of days old. No sign of contractions yet from the Ethereum or Bitcoin macro index. Sounds like I'm a doctor. Not suffering from contractions yet. Hope no ladies watching got PTSD from me saying that. How are we doing here? I love pulling up a moving average, or like an exponential moving average on this, and going like the 90-day period, just to see how incredibly low we are compared to all price history. Really, retail does not give a fuck about Bitcoin at all, really. Like, retail interest is Google interest, for sure. This could potentially mean that Bitcoin is, like, I'm just thinking about this from a much higher level. And this is like a very, very tinfoil hat idea, so feel free to disregard what I'm about to say, but this could be an indication of a super cycle. If we look at Michael Howell's Fed liquidity forecasts, he has it going basically in a very steep straight line up and to the right for the next decade, right? And we have Bitcoin, which the interest of which is very low compared to all historical examples, including all of the previous bear market at least, but we're further through time. So it should have more interest, you would think. Now, if you use Google Trends as a measure of retail sentiment across not only cycles, but multi-cycles, wouldn't this mean potentially that a lack of interest in Bitcoin would be a leading indicator of it being outperforming in the future? It's just, it's such a high time frame kind of level view of things, but this could potentially mean that you have this massive disconnection between everything in the crypto market. Like, no infrastructure plays people want to have it anymore. Nobody wants to have, different blockchains like smart chains or infrastructure or anything like that. Everybody would maybe want to have either just Bitcoin or just shitcoins. I suppose you could express this exposure just using the ETH-BTC ratio over a very long time horizon, which is something that I already advocate for. By the way, if any of you guys out there are having trouble managing your ETH-BTC ratio, because I've had a lot of people come to me so far and say, okay, Adam, I've been having some issues with the ETH-BTC ratio, and trying to get all the squiggles right is very difficult. Well, I would say make sure you're clearly defining the bull market periods. Define the bull market periods and then calibrate whatever your trend following methods are to this, and of course for that as well. There is no secret that Ethereum has been outperforming in the early part of the cycle. I think that this indeed is down to the ETFs. I would be insane if I didn't say this was down to the ETFs. This is probably the only market paradigm that's different to how it was previously. But after the Ethereum ETF is approved, and after we get beyond the Fed air gap period into the next phase of stimulation, I have no doubt that Ethereum will outperform. But what you may find, due to this tinfoil hat hypothesis that I have about Bitcoin, is that you may see something like this. You've got Ethereum outperforming as per usual, and then we have Bitcoin outperforming during the dip, or everyone just, it's just moving along as per usual. And then as we come out of the Fed air gap, we have a increase in Ethereum performance for a period of time, and then we begin to go into the Bitcoin super cycle, and then this continues to kind of decline like so. Or maybe it doesn't even do that. Who knows? Maybe the Bitcoin super cycle is already here, and it actually kind of comes up a little bit, only enough so that it can break down again. A couple of people have been saying to me, hey Adam, why don't you and Professor Michael agree on which is the correct major to hold? I want to hold Ethereum and Professor Michael wants to hold Bitcoin. Professor Michael is absolutely correct in his determination that Bitcoin is the ultimate asset and you should have the majority of it in your portfolio if you want to be objectively correct. My risk tolerance is different to his, using different methods. I do agree that Bitcoin is the superior asset to Ethereum in the sense that it is unchangeable. It had an immaculate conception. It is the perfect way of storing energy through time. It is all of these things. It is for real. Like the way Michael Saylor looks at Bitcoin, absolutely. However, for this phase of the market cycle and for what I prefer to have my money in and where I want the most market beta, I'm going to use Ethereum to represent those views. You all have to remember that I don't really do any day trading activities. For Professor Michael, he will move around risk and put it in different parts of his portfolio in ways that I won't, because his approach to the market is different to mine. He has a huge amount of long-term holdings, and he has maybe lower risk holdings in that long-term portfolio. And then within his speculative trading portfolio, he takes on risks that are so extreme and so like bonkers because he's the best at what he does that it would blow out anything that I could say that's within the risky part of my portfolio. So the distribution of risk within my portfolio is much more smooth. So it's like on the top end in the highest cap holdings, I'm taking on more risk, but then as you go out through the lower cap holdings that I have, I may be taking on less risk in a way of placing it. However, with Michael's, maybe his is pulled out to more extremes. So his large cap holdings are as safe as possible because he's using Bitcoin. And then on the riskiest side, he's trading, which is a super risky speculative activity. So you can never compare us together. And I know that there's a massive temptation out there to be like, oh, well, if one smart millionaire is good, then two smart millionaires are better. But you cannot compare us because we do not approach the market in the same way. This is one of the reasons why Professor Michael and I, now that we are approaching the market from different perspectives, don't often discuss what we believe to be happening with the market because we don't want to contaminate each other's views. As independent professionals, we have the ability to not need to rely on anybody and their external opinions to affect us. But yeah, you have to become at peace with that and understand which approach is best for you. Now, you can make that choice yourself. I'm not going to tell you which professor is best for you because I'm not you. I don't know what you want. I know what I want. I know what I want, and that is a portfolio that's massive, that's professionally managed, where I can make decisions slowly over time and that I'm not rushed into things because rushing into things reduces the quality of my decisions. If you're the same, which you very well may be, then you may want to follow my example. But this isn't a fucking promotion of the crypto investing campus. You're already here, so like I give a fuck. So let's move onwards now. Looking at Google Trends, yep, declining interest, and we saw again some more declining interest. Coinbase is not the #1 app on the App Store. We are seeing huge divergence here and a big drop-off in sentiment despite price retaining its highs. I'm going to be interested to see how that resolves itself over time. Yeah, it's just, I think it's so dumb when people are like, oh, Adam, well, you think Ethereum's the best, and Michael thinks Bitcoin is the best. Motherfucker, Bitcoin is the best. Like, he is objectively correct in that statement, if that's indeed what he said at some point. Ethereum is not superior to Bitcoin in a multitude of different ways. But like I've said previously, they are complements, right? They're not competitors. I mean, in some ways they do try and compete. For example, Bitcoin is starting to integrate smart contracts, but it seems like I have to fucking repeat myself day after day after day after day. My destiny here in this university is to repeat myself forever, again and again and again, to tell you people that Bitcoin and Ethereum are not direct competitors, but they are complements, right? And they're, at the end of the day, even if you wanted to reduce it another level further into the way that my mind sees the investing landscape, they're just fucking assets, right? They're just numbers on a screen. Which number's going to go up the most and when, right? Qualitative opinions matter very little when you have a chart that you can perform trend analysis on, and you can say, okay, well, it's declining, it's consolidating, it's going up or it's going down. Maybe if it's going sideways for too long, we don't know which one's going to outperform, so we'll hold an equal basket of both. Or maybe you wouldn't. Maybe if it was consolidating, you would willingly just choose the larger one, which would be Bitcoin. Fucked if I know. I mean, I do know what I know, but yeah, didn't show you all the screen. But yes. Just see them as assets. Don't get so caught up in tribalism. Like, I know that I have a love affair with Ethereum, but it's just because I believe that it's going to be, over the course of the cycle, the higher beta asset. So if I'm of the belief that something is going to be a higher beta asset, then why wouldn't I want to put my money into that and be thinking about how much money I'm going to make? There doesn't need to be a deep and philosophical discussion about which is the best asset. Again, that's also part of the lessons, which is I tell you, there's no point in thinking about things in stories, right? Stories just serve to distract you and they make you feel good and you think that you're very smart. It's easier just to look at this ETH-BTC ratio and go, I know nothing and I'm going to form a system that's going to manage my exposure to that spread. If that is something you want to do. You know, if it's an RSPS style exposure, then and an active exposure, you can do that. Long term, you can make a choice based upon just what you feel most comfortable with. You know what's going to happen. Okay, so liquidation maps are slightly biased to the upside for Bitcoin. Very biased actually on these CoinGlass ones. Look at that. But then again, the market has declined already quite significantly, so we could be seeing the reversion trade playing out here. What about Ethereum? Same thing. Everybody's betting on its downfall, which of course causes it to revert, which is how markets work. What a surprise. Right, speculation index declining, which but it's not kind of broken this upwards trend here yet. It's still kind of going up, so might see that last gasp of the market. Whoops. Bread coming off. All right. And the breadth in the stock market coming off as well, which is not good. Right, so how do we have so many people on the stream right now? Isn't it like fucking 3 a.m. for most of you people around the world? Anyway, let's go into the charts one last time, and I will have a chat to you about anything that I see. What are we looking at here for some of the other majors? Got Matic, BNB, Doge. Is Doge retesting any levels? I'm a big fan of Doge this cycle, especially with Elon Musk. Elon Musk, he's going to make Dogecoin a payment method for fucking Teslas, and he's probably going to launch a rocket into space with the dog meme on the side of it. which is probably going to cause dog memes to be fucking sent to infinity. This is including dog memes on other chains. I've noticed that Dog's outperformance also is reflected across chains, and that's dog memes on Base, Solana, and of course Ethereum as well. So there seems to be like a dog fucking thing that happens globally, and Elon Musk is probably going to perpetuate all of that. Solana's doing fine. Right. There's not really anything else I want to chat about. I think that's pretty much it. What about the liquidity proxy? Yep, still declining slightly. All right, so what I'm going to do now is I'm going to go into the chat channels, and you guys can ask me some questions. And hopefully they are good questions. Good questions. Please ask some good questions. I'm fucking begging you, please. Okay, cool. Back to the beginning. All right. Yes, sir. A beat dropped harder than Hex this month. Just want to give a shout out to you and all the captains. Been working through level 3. Yeah, good stuff. Good work, man. Right, I watched yesterday's recorded live over breakfast this morning and enjoyed your rant about tossing out the games, and I wanted to add into it advice for degenerate gaming plebs in the campus. Rather than wiping accounts and deleting Steam, you can actually sell your account at player auctions. You can get an estimated value for your account at Steam. Holy fuck. Damn, okay, smart, bro. Put that money into crypto. That's smart. I didn't know that you could do that. That's awesome. Okay. Yeah, nice. Okay, cool. Yeah, bless you. Vacation in Cuba, no problem. G, let's go. All right, GM. I have a question about Ultima RSPS. Of course you do. Would it make sense to use 2x leverage on some alts in my trash portfolio so that way I could only put... No. No. Absolutely not. No. You would do it the other way around. Bro, you don't willingly increase risk on your fucking trash positions. Yes, I mean technically, yeah. More buyers of dollars than sellers. Bear, good to see you. Good morning to the best investor on the planet. Good morning to the best investment team on the planet. Good morning to all those ready to learn. And GM to you too. Good to see you, Bear. Who knew that Bear was basically the first student in fucking Hustlers University? I cannot remember this university in any of its previous forms existing without Bear being here. He is the OG of OGs, right alongside Revoso. Shiza, good luck. Thank you for the captains and guides. You're welcome. The game is good. Yep, excellent. Looks like a very good motivational post. What do you think about this watch? I just got it a few hours ago. Looks lovely. That could have been a 10x, but it is a beautiful... oh, it's an Invicta. Oh, it's garbage. Wait a minute. Is that a two-tone? Oh, fuck, man. I wish you'd come to me before you bought this fucking watch. Anyway, the point is that you like it. As long as you like it, that's all that matters. GM Hello Prof, can you give me analysis on Liquidity WETH? Oh, that's fair enough. I don't normally take requests, but yeah, it's looking like absolute dog shit, isn't it? Looking like fucking garbage, mate. Yeah, that's what I think. It looks like trash. Which do you find more fulfilling? Intense and immediate pain or gradual and elongated suffering? I don't find pain fulfilling at all, really, in any particular fucking way. That's a very strange question. It would make more sense if it had some context, but no. That's a blast from the past. All right, Adam, I know the whole crypto market is highly correlated, so this could mean that broad diversification is useless. You're just trying to get an answer out of me, aren't you? However, the fact that it's highly correlated can also incentivize narrow diversification. Can you please explain what your thoughts are on this? No, it's more Listen, the point of the lesson was that if you buy too much shit, then you're going to be spread too thin. That was the main principle that I was trying to communicate to you. The way Professor Adam absolutely despises people who say ETFs change the game is beautiful. No days off fruit, working while listening to investing analysis. Are you performing fucking surgery on people? Is there a person over here taking a rectal thermometer reading and you've taken a picture of them? Is that rectal temperature checking? This campus is just going in a direction that I did not expect. GM, g'day, mate. I'm first crack of the IMC exam today. After going through all the material given to us, it's changed my perspective. Excellent. Thank you for the content. Excellent. Good work. It's really interesting to see not only the market wants to kill you in every possible way, but it also makes people think that lagging information, such as negative ETF inflows, are the reason for the move down. Feels like a war against the market. I love it. Hello, everyone. I'm Mahilma. Welcome, Mahilma. I hope I've pronounced your name right. It's good to have you here. And hopefully you're watching the analysis right now so you can get that greeting from me personally. Hi, Adam. I have a finding I want to share. Notice the BTC correlation to gold and silver has been really high since March, and it has generally been correlated for obvious reasons, but with an even higher correlation since March. The entire time I was under the impression that BTC rally was just a retard pump with liquidity-based fair value way below us, but seeing gold rise the same way, very high correlation, makes me wonder if there is a factor being missed in the liquidity data we're getting, since there is no way retail traders have pumped the gold and silver market as well. Yeah, like trying to determine what precisely caused both markets to rise at the same time. I suppose it is good that you've identified that. I mean, the question is, what can drive both markets at the same time? I would say that would be liquidity expectations, because that is the fundamental driver of both of these markets. And if those liquidity expectations are based upon balance sheets and interest rates rather than the shadow monetary banking system, then you're going to have a disconnection between the market and what people are expecting, or the reality, I should say. The expectations are within the price of the market versus the reality of what will actually be happening. I would go as far to say that the initial price reaction would be based upon really first dimensional things like balance sheets and interest rates, while the liquidity-based fair value and the resulting like the discounting of the real effects over time, which is something that we did the Granger causal analysis for, is like a 3 to 5 week lagging effect, and that is from real global liquidity, which is incorporating all of those shadow monetary base effects and everything as well. So it's not with outside the realm of possibilities that you could have that initial jump up based upon some expectations that are not based on reality. Then it kind of curves off afterwards as the reality of what actually is global liquidity sets in. Hi, Adam. Hope you're doing well. I'm seeing a lot of wheelchair reacts. I've started exploring crypto during the COVID times. Back then I owned 2 ETH, which purchased for whatever. Doesn't matter what you purchase them for. Eventually I had to sell them. Yes, cool. Now I'm eager to invest 10 grand. Yeah, it's still possible to turn this 10 grand to 1 million through smart investing. Thank you for considering my query. You've only asked this question because you haven't gone far enough in the lessons. If you've actually gone through the lessons, you'll realize that this question is totally retarded and absolutely asinine. Your perspective of trying to get a target of some sort by investing is actually a leading indicator of your failure. Because it displays a lack of understanding. The market is not there to serve you. The market has no idea what you want, no interest in your desires or anything like that. Right? You will get what you're given if you invest professionally, and there is nothing else you can do. You show up and you accept what the market gives you, and that's all you can do. If you make it to 999,000 and you say I haven't made it to 1 million yet, and it peaks out and it starts to reverse, you will be left behind, and all of your wealth will get obliterated. And that really is the crux, the main crux of the problem of the question that you're asking here. Also, why only $10,000? Why not more? It seems like a very precise, like exactly $10,000. It's very strange. But anyway, so my advice to you is that you can do extremely well in crypto for sure, but your brain is full of some NPC matrix programming that needs to be cleaned out by your presence in here. So my best advice to you is to show up every single day, make sure you get through the lessons, approach this like a professional, and you will stand a chance at survival. And then only then after you have stood a chance at surviving, can you make some money, right? And then potentially even keep it afterwards as well. I know, seems like a foregone conclusion that you should make money, but you need to avoid destruction first. And your fucking way of speaking here shows me that you're probably not ready yet. But I have faith. I have faith that if you stay here, you will do a lot better. ETH is high beta, only on the way down. Hilarious. Yeah, exactly. We have 1,480 people today. Not bad. Yeah. Do the lessons. GM Prof, thanks for the lessons. I'm super excited to finish my masterclass. Super new to the university. I'm barely starting the long-term investing segment and already learned a lot. Excellent. Good work, mate. Okay. The blue dot is where I entered the spot market, bought most of my crypto. Would you risk keeping it or taking chunks out of this stage? The coin is irrelevant. I'm referring to the position. Smart. Okay. I respect that. Timing the market, kind of impossible. And the exit strategies, which I mentioned earlier this week. It's a very strange token. If you... Bro, I know you're kind of asking for a bespoke signal here. If I show you the valuation of the market and like using the CBBI as an example, if you've got the range, upper and lower ranges of where you expect the valuations to be, and we are like, we've gone through the bear market period and we're all the way up here. If we're up here, then you tell me, is this a good spot to take profits, considering that at a later date the valuations are probably going to cool off a little bit, and then we'll see the second half of this cycle throughout the year 2025. 2055 or 2025. It's up to you, bro. It's up to you in the way that you want to approach the market. If you want to, perhaps, if this was a speculative position for you and it was a gamble that paid off, what you may prefer to do is rotate whatever this was into your majors as a form of profit taking, because this is a way of lowering your beta. So you would go from this token into BTC, and that's a form of profit taking, right? That's a form of taking chunks out of your investment. So that's a method that you could potentially use. And then if very big if we're blessed with lower prices and lower valuations over the course of the next couple of months, then you'll have the opportunity to either re-leverage this or go back into some higher value projects that you like. That's probably my best advice for you. Yeah. Second time getting to watch IA live. Good stuff. Good stuff. All right, cool. That is your great grandfather. He stacked an entire Bitcoin in 2024 to free our family from fiat debt slavery. I love how they all have laser eyes. Fuck Quebec. Yep. Midday in the gas fields. It is what it is. Big fan of Doug the Cycle. Yeah, absolutely. D-Gens thinking this was a signal. Yeah. Which is the correct way of doing the exam? Write down the answers I'm sure of and the ones I'm not sure of. No, brute forcing is just randomly changing answers. If you... Not brute forcing is changing your answers to questions based upon a sound re-education of yourself. But yeah, the optimal way is to note them all down and then rank them by confidence. Hit the ones that you're most confident... hit the ones that you're least confident in to increase your understanding of those. Then hit the ones you're absolutely certain you can't get wrong, because those are the ones that you probably are misunderstanding because you don't commit any brain power to them. There may be a lot of people here because of the Slurf token. Maybe let them know they should be in the DeFi campus. But not really. I'll tell you, the Slurf token... Alright, let's look it up. Why not, right? Let's look it up. Because I heard about it last night. My... Oops, that's not correct. Slurf. Alright. Now, I heard what happened last night. Somebody jeeted their whole fucking liquidity pool into the fucking oblivion. And it went up by 1 billion% in basically a single day. Now, this, I don't know what the fuck people think that they can possibly achieve out of this, but the people that have already been holding since down here have made like $1 trillion. So you don't think that they're going to DCA out of these positions for all of human history through like all of this time, all this profit that they're in from the zero line zone, right? And you think that you can buy into this and somehow receive this same thing? It's fucking done. Like that's my opinion. My job generally is to keep people from making shitty mistakes. So no, you're in the right place. And I'm going to say to you, if you go to buy this token, you're probably a degenerate gambling scum and you're probably poor. I'm not poor and I'm not interested in this token. So maybe there's an indication there. GM, Kara, good to have you with us. Always a pleasure. I have so many questions, but I won't ask them. I just want to let you know I'm here. Love you. Love you too, my friend. Perhaps retail interest is down because you're finally reaching more people than you think through the real world. Unlikely. What are your thoughts on Pepe Fork? I don't know. Do you like Professor Schwab in the Ecom campus? That's a very strange question. Do you like Professor Schwab? Bro, I love Professor Schwab. He is so fucking cool. He's a really nice guy. Him and I get along really well. Schwab and myself are probably the two most autistic professors. I hope he's not offended if I say that, but he loves his campus, man, and he's very smart. I don't know what it is about him, but he really knows how to make education for retards accessible. So I respect him a lot in that sense. Also, he's a hustler. Like, he gets shit done, which I like. Can you explain how the compilation of publicly available indicators on TradingView is supposed to yield systems with alpha? Very, very nice question. Very nice question. Very spicy as well. Very spicy. I would say that I have a saying. That's a very good question, mate. I really like that one because it kind of challenges me a lot. I think that alpha depends on a multitude of different things. Now, indicators, for example, like when you pull up a very basic indicator on DEX tools, the reason why it works is because the competition within that zone, within that kind of market environment, those people are probably like the proportion of people that are doing systematic investing compared to discretionary trading. The ratio is probably 99% or greater in the discretionary dimension versus the professional systemized dimension, because your ability to perform analysis on these time series is incredibly low, which means that you are likely to get an edge in that environment. But also, when you move out into something that is a highly liquid, highly saturated market, for example, foreign exchange, stock indices, or even to some degree cryptocurrencies at the large cap level. Of course, they're a fraction of the size of the stock market, but let's just say the Forex and the stock markets, at those levels, there is only systematic trading and investing, like all the way from the very low level scales of high frequency investing all the way up to high time frame countries that are doing big purchases and sales and things like this. Your ability to make money using systematic investing is probably very low. So it's more to do with the market environment that you're in. And when you get to cryptocurrency like Bitcoin and Ethereum, I will not deny that the ability of a system or an indicator suite to extract alpha from these markets is actually lower than it was previously, and it's getting a lot harder over time, to the point where now the market is quite efficient, and even using TPI based systems, that the approach, it still doesn't always work, but it still does work on average over a very long period of time and will get you access to higher than normal profits. But also, it's the technique and the dedication behind them as well. It's the time coherence and making sure that they're constructed well. And it's the acting upon it without emotionality. These are the things that a lot of market participants don't have. So even if you're in a market environment where you have a big proportion of people who are discretionary investing and a big proportion of them that are systematic investing, an even split, so that the market competition is actually quite high, the systematic investors who are using these indicators, they may still be allowing discretion or emotion or faulty decision-making things to enter their processes, and they would still be making faulty decisions. So how much of those systematic investors are actually investing systematically, and at what degree of complexity are they all at? Because there's also competition within that cohort of people. You know, we have the very simple systematic investors to the very, very advanced and complex systematic investors. And there's always going to be a arms race between all these different cohorts and all these different market environments. So your question is very one-dimensional, and the answer really is multi-dimensional. So hopefully that answer gave you a little bit of more insight, because what you're saying is basically true, but only under certain conditions. And what I'm saying is also true. You can use systems using publicly available indicators, but it's also only true under certain circumstances. And knowing which circumstance is best to use them in is very critical. Like, for example, I don't use TPIs. I don't rely heavily on TPIs within the stock market. I never did. When I was trading and I was running my hedge fund style portfolio in the American stock market, I wasn't using fucking TPIs. Fuck that shit. Like, over reliance on that thing at like the index level and trying to do like other things. You can try and make it as complicated as you like in a technical factor, but you need to have fundamentals. They need to have strong fundamental drivers and econometric systems. Doing the indicators isn't enough. But yeah, so it's a very, very complicated answer to a very very spicy question. That's probably the simplest and most directly challenging question I've ever been asked. It's an excellent question. Excuse me, Prof. One season crypto DJ made me guess that Sol would reach super new all-time high, $500 this year due to the projects built upon it. What would your comment about it be? Thank you very much. I'm loving this IA. Possible, yeah, absolutely possible, for sure. It could reach $500 easily within this cycle. Why not? Do we have a compilation? How are we doing for time? Okay. Do we have a compilation video of Adam's best rants? I want to share it with some friends to encourage them to join the war. Yeah, somebody should do a supercut, although I've made all of the historical investing analysis videos impossible to access now. Perhaps it's time to actively manage liquidity holdings. Yeah, I've sold a bit of my liquidity a while ago, actually. I'm pretty sure I've noted that somewhere in the SDCA channel. But I'm just happy to let it decay into oblivion currently. I'm actually having a personal crisis right now. I'm like, should I just put all of my shit into majors? Because over this run, and this is an issue for me because a lot of you won't be facing this same problem. I've made so much fucking money over this period here, like in my personal portfolio, that I'm thinking that I should probably just rotate like all of my wealth into majors and leveraged majors and just run out the rest of the cycle on leverage and just like relax, like go sit on a beach somewhere and drink fucking cocktails instead of trying to actively manage my shitcoins. But you know what? I love the game. Yeah, fuck liquidity, honestly, at this point. Your opinion about ARB? It's a layer 2 blockchain built upon Ethereum. I'm already on level 5 of the masterclass. Yeah, okay. We'll listen to it every day and remind me. Yes, excellent. Good work. Hi, Prof. Do you have any advice when it comes to differentiating between the different indicators? I'm stuck between 38 and 42 on the exam for the past 2 weeks. Yeah, well, have you like in price analysis principles lesson, I showed you, or I'd like to think that price analysis principles. I added a second video to this one here. Additional video to help people identify mean reverting and trend following indicator behaviors. So there's a 10-minute video where I go through the different behavioral characteristics of different indicators and to try and explain them a little better to you. So maybe if you could review that. How do you see Solana in this bull run since it's proof. No, Solana could not replace Ethereum. So there's actually a layer 2 that is forming part of Ethereum that has Solana machinery in the background. Once we have a way of abstracting away the bridging process, Solana is dead. Maybe not, though. I don't know. This is the thing. I'm not very good at doing qualitative analysis, so I'm not going to. I'm not going to take the bait. If we have consistent flow from the ETFs and we have very good upcoming market conditions, giving it's an election year and everything, why would we have a multi-month consolidation? Oh my God, you're the same as everybody else. The SDCA portfolio, if we just want to hold BTC and Ether, said yes. Yeah, no, it's okay. You can ask me this question. And there are some other coins that I don't want to go into. So does that automatically make the... Yes, yes, you're correct. That does make that. Yep. What are your thoughts on AI for the cycle? Artificial intelligence is cool, but most of the people see it as a meme. I think unless there's a major change in artificial intelligence, the hype is gone for it. Hey, Prof, currently the DCA period is 16 weeks. But yeah. Why? Why would you expect a decrease of the DCA period? Gold can have a 5 to 6 month... Yes, correct. Never, ever forget this. Yep. 50 bald eagle freedom dollars a month. And you fuckers... Well, a lot of you fuckers can be bothered to come in here, but a lot of you can't. Yep. The reason gold is behaving like... Yep. Yep. Nicely done. Beautiful. Good to see. No. I want to appreciate all that you do. My question is regarding tax implication of rotating high beta profits into low beta majors. You then would not get capital gains discount, correct? Is it worth doing that or holding for the discount, or is it just dependent on the scenario and how much profit you wish to retain? Appreciate all your efforts. That's a question that only you can answer, man. Because it's dependent upon your fucking tax bracket. And it's also dependent on what your plans are for the future. And how you're going to manage your exposures over the rest of the cycle. If you rotate now, and then we go through something like this, well, I'd like to hope that you've been holding for over a year, or, I don't know. If you haven't been holding for over a year, suppose you don't really have capital gains tax discounts to worry about at this point because you're not going to be eligible for them. So you're going to lose them. You're going to lose money on this regardless of whether or not you're going to lose money on the tax that you pay from not having access to the capital gains tax discounts, or you're going to lose the opportunity cost of the thing declining and you not being able to buy back in and write it back up again. So what's the least of the two evils? Well, at least if you lower your beta, you have the possibility of making more aggressive allocations later on. I don't know. That's my personal opinion, but I haven't quantified it either. My mental math could be off. No, I'm not in love. I had a really good first date the other day though. Really good. Yeah, it was nice. I suppose I'm also happy that my fucking calf doesn't hurt today as well. It just hurts when I walk. If I'm sitting here, it's not bad at all. No, well, we're at an hour mark now. I usually hit an hour. It just feels longer to you because I'm doing it later in the day. No, cunt. Look at you. Coming in here with your fucking... How long have you been in here? Couple of weeks? 3 weeks. You haven't done fuck all in this campus and you come in here asking me about Pulse Chain. This is the point at which I need to end this stream. Bro, fuck Hex. Fuck Pulse Chain. Delete that shit from your brain, please. Please delete that shit from your brain, because it's only after you have developed your systems that you can go back and revisit them if that's really something that tickles your ballsack, okay? But fuck them off. Delete them from your mind, right? Until you have completed the masterclass and developed the systems required to actively manage the opportunity cost that you're going to be wasting by investing in this bullshit. Please. Yeah, legit. His vibe is always unique. Yeah. No. Yes, I do have a lesson 50. Yeah, I have a lesson on tax on crypto for sure. It's probably one of the most important lessons, actually. How to avoid destruction through taxation. Yeah, there it is. Avoid destruction via taxation. How not to rebalance. Lesson number 54 in the masterclass. All right. That is feminism and Bitcoin. The feminism Bitcoin ratio. This is like the BTC porn ratio. Ah, fuck. Okay, that's all I can handle, man. That's all I can handle. Listen, I love you guys. Thank you for showing up today. I appreciate you all. If you see some new students in this campus, please encourage them and make sure that they are coming back every single day. Please leave the abuse for me. We don't want to scare the new guys off. If they've come into this campus, they've come in here with a dream. The least we can do is try and encourage them, try and make sure that they're coming back and they're dedicating themselves to the process, because it's only by showing up every day that you can be like me. Side note as well, notice there was a lot of fuckers or like people, or like yesterday, I said that I was wearing a different watch and I had the Casio on, and some guy said, "Oh, I can't believe I've got the same watch as a millionaire." Let me clear something up for you, all right? No hate to that guy. I know you were excited, and it's a nice watch and all that stuff. But having a watch like me does not make you like me, right? Nothing. You are not like me in any way. Doesn't matter who you are, right? You're nothing like me. The only thing that will make you like me is showing up every day and doing the work. That is what will make you like me, because that is what got me to where I am. Right? Doesn't matter what fucking shirt you wear, doesn't matter how you dress, doesn't matter what haircut you get, doesn't matter how you talk. You will not be like me unless you actually do the thing that defines me and my character and how I became like I am, which is by putting in the work, maximizing your suffering, and then using that suffering as a compass is the consistency, right? And the love for the game that will make you like me. And with that, I'm out. I will see you all tomorrow for another episode of Investing Analysis. Peace.
Players, put your pinky rings up to the moon. Girls, what y'all trying to do? 24 karat magic in the air. Head to toe, so clear. Look out. Pop, pop, it's showtime. 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 Guess who's back again? Oh, they don't know. Oh, they don't know. I bet they know as soon as we walk in. I'm wearing Cuban links, designer mix, Inglewood's finest shoes. Don't look too hard, might hurt yourself. Known to give the color red the blues. Shit. I'm a dangerous man with some money in my pocket. Keep up. So many pretty girls around me and they're waking up the rocket. Keep up. Why you mad? Fix your face. Ain't my fault they all be jacking. Keep up. Players only. Come on, put your pinky rings up to the moon. Girls, what y'all trying to do? 24 karat magic in the air. Head to toe, so clear. Look out. Second verse for the hustlers. Gangsters. Bad bitches and your ugly ass friends. I cannot preach. I cannot preach. I dangerous man with some money in my pocket. Keep up. So many pretty girls around me and they're waking up the rocket. Keep up. Why you mad? Fix your face. Ain't my fault they all be jocking. Keep up. Players only. Come